And we are live from Bloomberg's world headquarters in New York. I'm Shanali Basak.
And I'm Tim Stenovec. Welcome to Bloomberg Crypto. It's a look at the people, transactions, and technology shaping the world of decentralized finance.
And Circle is set to go public as crypto companies increasingly tap the public markets to raise funds.
This comes as the U.S. Congress debates stablecoin bills, with the Senate version moving forward last week. We've got the details.
And Trump media takes a page out of Michael Saylor's playbook as it agrees to raise $2.5 billion in capital to buy Bitcoin.
That's all ahead right here on Bloomberg Crypto. First, though, let's take a look at how Bitcoin is outperforming those old school assets. So last week, stocks, bonds, and credit posted the worst synchronized sell-off since March. But check out what Bitcoin did. It posted its sixth gain in just 7 weeks. Remember, the Treasury market rebelled against President Trump's tax bill. Crypto rallied. Interestingly enough, it was also at the same time that crypto deepened its institutional street cred as policymakers in D.C. normalized stablecoin, Shanali, for mainstream use.
And I'm watching a roadshow, Tim. We are looking at IPO news today. Stablecoin issuer Circle hopes to raise up to $624 million in an initial public offering 24 million shares for $24 to $26 a piece. The ticker will be CRCL. It could start trading as early as next week in an offering led by JP Morgan, Citigroup, and Goldman Sachs. The company took in roughly $600 million in revenue for the first 3 months of 2025, and it's profitable.
Well, as I mentioned, Congress is working through that Genius Act to integrate stablecoins into mainstream finance. Tether is the largest issuer of stablecoins, and CEO Paolo Ardoino joined Bloomberg last week to discuss whether the bill changes his plans.
It's important to us to see how the Genius Act is in fact distinguishing between foreign issuers and the domestic issuers. We believe in the importance of USDT as the most used digital dollar in all the emerging markets in developing countries, right? The main interest will remain outside the United States, but also we are open to create a domestic issued stablecoin that will be competitive under the US.
Let's get to the latest on the stablecoin bills with Bloomberg Intelligence senior U.S. policy analyst Nathan Dean. Now, while this is very promising for the crypto industry, it might be equally as promising for mainstream financial institutions that want to get in. What did the crypto industry get and not get out of this bill?
So what the crypto industry is certainly getting is the first step for Congress to actually adopt anything with crypto, really. I mean, for the last couple of years, the cryptocurrency industry has had an enforcement albatross across its neck. And now Congress is actually most likely going to pass within the next month or so this legislation that will give the issuers the ability to register, an ability to work with regulations, because stablecoins have been in this regulatory gap. Now, I don't think it's going to be like, this isn't going to be a cryptocurrency framework. That's going to come later in a separate bill. But this does get this idea that Democrats and Republicans can come together and pass something on crypto. I would just caution, however, is that even though this bill could pass by June or July, a lot of the language in here requires the Federal Reserve and the Office of the Comptroller of the Currency to conduct rulemakings, and that could take another year to actually see the specifics of what comes out.
So what would be the implications of that, Nathan? What are you telling clients right now when they're trying to understand a timeline of when we could actually see some of the stuff in this bill not just become law, but make those changes that these advocates want to see?
Yeah, so, there's a lot of sentiment that once this bill passes, it's almost like a retail adoption that crypto is going to go forth and really move forward here. And what we're just telling our clients is just remember that the institutional portion of this is going to take some time. Now, there's going to be a proposal. There's going to be multi-hundred-page comments. This is going to get finalized probably in mid to late 2026, assuming that this bill moves forward. And again, that enforcement albatross is not going to be there. So that's not a bad thing. But I would just say is that we are going to have to see additional more language for the compliance and the risk folks at these companies. If you're on the trading side or the speculation side, you're really not going to see much impact of that.
Nathan Dean of our Bloomberg Intelligence team down there in Washington, D.C. Nathan, thanks so much. Well, now Wall Street's top banks are discussing the issuance of a joint stablecoin. This according to the Wall Street Journal, which says the stablecoin is subject to legislation and demand. Last week, Kraken announced plans to offer tokenized equities for its non-U.S. user base. Here's co-CEO Arjun Sethi on Bloomberg.
These types of products, it's not going to be just us, but anything that's happening in the crypto protocol ecosystem or decentralized, is that we're letting people get access to be able to innovate on behalf of U.S. customers in the long term, on behalf of European customers and and rest of the world customers, is that you're able to finally, in one place, get access to global liquidity, access to more products, and not part of one, again, walled garden.
Joining us now for more is Bloomberg's Michael Regan, who leads our crypto coverage. Mike, as I mentioned, it's subject to legislation, but also demand. From your view, as one of the leaders of the crypto team, what is demand for these products?
Well, it's interesting. I think what they're picking up on is the idea that demand for stablecoins is sort of spread beyond just the crypto market. I mean, stablecoins were invented to be just the dollar sort of surrogate in crypto markets because it was, hard to on-ramp and off-ramp regular bank accounts into certain crypto exchanges. So stablecoins filled that niche. But now I think what the banks are picking up on and what a lot of fintechs are picking up on is that, there is potential to use stablecoins in regular business transactions, especially if you go cross-border payments that can sometimes take days and be very expensive to execute, can be done for small fractions of the cost with stablecoins and almost instantaneously. So from a traditional banking standpoint, there's an attraction there. And you can see why they'd, as the journal reports, the biggest banks are interested in this. A lot of fintechs, Stripe acquired Bridge, a stablecoin infrastructure company. Visa is planning to offer cards that actually pay out from stablecoin balances. So it's really showing this sort of, the old cliche, people are bullish on the blockchain technology, but not necessarily Bitcoin. People are really bullish on what stablecoins and crypto can afford in financial transactions beyond just the crypto markets into traditional payments and cross-border payments.
Mike Regan, we thank you so much. We're looking forward to seeing where the story goes. It's not just the banks. Of course, we are seeing a lot of those fintech companies, as Mike was talking about. And just today, we learned that payments processing from WorldPay will allow customers in the U.S. and Europe to make disbursements with Circle's stablecoin. WorldPay's head of fintech growth and financial partnerships saying that this, quote, clearly solves pain points in today's payment ecosystem. We haven't had anything come along like this that's disrupted cross-border payments in this way in recent memory. Joining us now, Anna Yuan, founder of Perena and former head of stablecoins at Solana, another company that's much in the news these days. Anna, interestingly, you see the banks getting in. You've seen the Bank of America CEO previously say that he would consider launching a stablecoin on his own anyways, let alone the banks banding together. Realistically, is a bill better for the crypto industry, the core crypto industry, or is it actually a great thing for core Wall Street to get in on this as a new business?
Yeah, I think for this bill that's specifically structured for full collateralization, it's much better for onshore U.S. stablecoin companies, and you can see that banks are kind of fighting back on that. Banks are saying, oh, but we want special treatment. We want fractional reserves. We want to be able to lend it out. Yet, I think this bill is extremely beneficial for the U.S. to keep dollar issuance and stablecoin issuance onshore, because this is a gold standard that the rest of the world is going to follow. And without that, as Tether CEO was saying, Paolo, last week, that they've chosen historically to issue fully offshore, and that's not great for regulation.
And we talked about the benefits for the companies that are behind this and for the industry. But when you think about it from the perspective of a consumer who may not even understand necessarily what a stablecoin does, what is the promise there?
The promise is borderless, 24/7, permissionless accessibility of the dollar. And previously, if you're someone who lives in a country with poor ID issuance and you may not have a national identity, it's impossible for you to access the dollar. All you can get is like second-hand, third-hand dollar bills. And now everybody, we've seen in the industry that people really want dollars because they want to get out of inflation or they want better investment products. But where Solana and Perena are ahead of most of the industry is that not only do we see demand for stablecoins as just the dollar, but we're seeing dollar-based and U.S. economy-based investment products coming on chain, which is what we were talking about at Accelerate last week.
You know, it's interesting. Sometimes when you try to pay somebody else via your credit card through one of these online apps, you'll see that you have a fee. Sometimes a fee that can be not great, right? I mean, sometimes they're quite high. If you look at what you can do with stablecoins, if you're making a peer-to-peer payment on Coinbase, for example, that fee is 0. And so I'm wondering what that cost is to financial payments person to person. Do you think that that fee goes down to 0 across products because of what stablecoin can do?
I don't think that fee goes down all the way to 0. I think in different ecosystems, for example, on Solana or on Coinbase, on Binance, you can pay with 0 fees. However, for businesses and individuals, eventually you have to pay outside of the ecosystem. Then you incur a fee because naturally, a lot of people tout that, oh, credit cards are charging 3% and stablecoins will be 0. I actually think that's a faulty argument because there are regulatory AML costs to anything you do. And the moment you touch fiat or you want to work with regulated financial institutions, which is almost all the businesses, you have to incur costs.
Who loses out in a world where there are seamless, low fee or no fee, cross-border, peer-to-peer transactions? Is it credit card or large companies such as those? Is it central banks in countries where inflation is high? Who loses out here?
A couple of stakeholders. One is central banks that have been extracting value from their population definitely loses out. They don't have the ability to control capital as well, and we've seen that with countries like Nigeria and China. The second one is banks that have refused to innovate. We see that fintechs are catching, like Robinhood and Stripe are going full steam at adopting stablecoins, but the traditional banks that are still charging users like $25 to send a wire, that's going to go away because people are going to figure out that they can send stablecoins very, very quickly.
Perena Founder Anna Yuan, gonna have to leave it there. Thanks so much for joining us. Please do come back again soon. Well, coming up, we're gonna head to the Bitcoin 2025 conference. It's happening in Las Vegas. That's where Blockstream CEO Adam Back is speaking along with members of the Trump family. And to access all of the latest data on news on crypto, just check out CRYP Go on the terminal.
Some of crypto's biggest names, from Michael Saylor to David Sachs to Senator Cynthia Lummis, are descending this week on the Las Vegas Bitcoin annual conference. The Trump sons will also be speaking. And remember, today, Trump media announced plans to raise $2.5 billion to build a Bitcoin treasury. Bloomberg's Anthony Cormier is at the conference. He joins us now. A lot of headliners. Now, what do you expect in terms of new news coming out of the lineup?
Oh, goodness gracious. I don't know what they're going to say, but they are certainly exultant. This is a triumphant moment for the industry. I expect that when we hear from the vice president tomorrow, he'll continue with the theme that the president himself has been pressing, that the U.S., to this administration's mind, is going to be the crypto capital of the world. So I expect that we'll hear a lot of that refrain this week.
Hey, Anthony, just share with us what the vibes are on the ground a little bit, especially in the context of the involvement of the Trump family. You know, we've spoken in the past to Eric Trump, who denied that there was any sort of conflict of interest, but I do wonder if people within the community are concerned that there could be picking of winners and losers within the crypto industry.
I don't feel that. It's a great question, but I don't actually see that here on the ground. I am getting a sense of triumph, right? That the president is into this, which means a rising tide will lift all boats. I do not get any sense that he's going to be able to choose who's the winner and who's the loser here. In fact, you walk around the facility and you'll see all kinds of Trump memorabilia, hats and shirts and all kinds of pro-Trump stuff here. So I don't get the sense that they're worried about his involvement or his family's involvement.
Anthony, you're going to have to leave it there. We're going to let you get back to everything happening at Bitcoin 2025 in Las Vegas. Really appreciate you joining us, Anthony Cormier of Bloomberg News. Well, joining us now is one of the Bitcoin 2025 speakers, Blockstream CEO Adam Back. Adam, good to see you. I want to just follow up on what we heard from Anthony just now and really get your view of the way that we're seeing mainstream adoption of this technology accelerate during this administration. What are you seeing on the ground? What are you hearing from partners, from potential partners at Bitcoin 2025?
Yeah, so there was an industry day yesterday where a lot of public companies that have Bitcoin strategies in play speaking. Apparently, it's now at around 80 companies globally. Of course, the most recent just mentioned is Donald Trump's media company entering their Treasury play. So really an area where enterprise adoption is picking up, and Bitcoin is a treasury asset for public companies as well.
I'm wondering which company that was. It's interesting. PSQ Holdings, which has Donald Trump Jr. On its board, is surging today on the heels of exploring a crypto treasury. To Tim's question earlier, the Trump family has been very involved in the crypto world. When you think about stablecoins, when you think about treasuries tied to Bitcoin for companies, are they absorbing more money in the space, or are there enough riches for all?
Yeah, it's a question I had talked about with a banker recently, which is how scalable is the treasury company approach? I think ultimately it's extremely scalable. It's the largest arbitrage of the century probably, which is sort of arbitraging the US dollar, euro, the fiat-denominated current world with the Bitcoinized future in a few decades. And so if you think about the addressable market of that being in the $100 trillion to $200 trillion range, there's lots of scope for, even extremely large companies with large cash reserves like Apple, Microsoft, and so on to enter it without making a dent in this market.
To Shanali's point, are you concerned at all about potential conflicts of interest given the proximity of the president's family being involved in this industry? The same question to you that I asked Anthony moments ago, that winners and losers could be picked within the industry.
Well, I think they're all public companies, right? So they're having to compete in the free market. So, ultimately there's quite a lot of competition and some very fast-paced companies in the sector. Some of them are, smaller companies with a high velocity. Some of the big companies with established businesses. So we'll see how that shakes out in the market. It's generally positive, I think. The current administration in the US improving the regulatory environment for Bitcoin and Bitcoin Layer 2 and Bitcoin settlement companies.
One question I have is what the crypto industry starts to look like in terms of dollars brought in by institutional investors outside of Bitcoin. You saw just a week ago Solana, for example, not only hold a massive conference that drew a lot of crypto native investors, you also saw them strike a deal with Kraken to tokenize equities outside of the United States. Do you think that Solana, among other types of crypto assets outside of Bitcoin, can start to become more mainstream?
No, I don't think so, really. If you look at the overall metrics, the so-called Bitcoin Dominance Index is up more than 2 times in the last sort of 18 months or so. So really, the lion's share of the enterprise adoption, sovereign wealth funds, pension funds, public companies, ETFs, it's all flowing into Bitcoin. So I think Bitcoin is really the only sort of commodity with clear regulatory coverage and no CEO, no company in charge. So I think all of these companies are effectively startups and some kind of ambiguous regulatory coverage security.
Given how well these startups have done, especially over the last few months, Adam, and given the activity that we're seeing in the space, what would you say to the institutional players out there who have not yet necessarily adopted this technology or gone all in on crypto that some of these smaller companies have? To what extent, in your view, do you think their business model is at risk?
You mean the early stage, sort of recent Bitcoin public companies?
Yeah, I would say. Well, I would say the main U.S. institutions that we talk about all the time, traditional brick and mortar banks like the Big Five.
Right.
Do you have a message to them that says, we're actually making a big impact when it comes to this technology. You guys need to pay attention, or else you're going to be left in the dust. Is that where we are right now?
Well, I think there's 2 tracks. One is Bitcoin, the asset, and there the traditional financial institutions are becoming quite active. Every few weeks you see, a big entity like a competitor, Fidelity, offering Bitcoin-related products to market. You've got the BlackRock ETF, which is record-setting. So I think the Bitcoin institutional adoption is here and coming fast. Those things take a while to mature because they have to develop product playbooks and training. And then the other side of the equation is the kind of wire transfer banking, where stablecoins are starting to, provide a better banking experience, basically. So you get 24/7 banking. You can send a wire transfer at a weekend to somewhere in Asia and have it get there in an hour. So I think the banks have some catching up to do in terms of user experience, let's say.
Adam Back, the CEO of Blockstream, we thank you so very much for joining us, of course, on the heels of Bitcoin 2020. It's going to be a busy week for the crypto world. Now, coming up, outgoing CFTC member Summer Mersinger says perpetual crypto futures are coming to the U.S. More of Bloomberg's conversation with her next. This is Bloomberg.
Earnings season is here.
Earnings, the hot topic of conversation. It's going to be a lot of fireworks.
Pretty astonishing moment in time in the earnings context.
Bloomberg is first to break the numbers.
Goldman Sachs, JP Morgan, Morgan Stanley.
Booking, Airbnb.
Meta, Microsoft, Qualcomm.
There's a lot to talk about here.
With the smartest insights.
We're not seeing dramatic weakness.
It has been an incredible period of time from a trading perspective.
We feel really good about the market share trajectory.
Continuing coverage on Bloomberg. Context changes everything.
Perpetual crypto futures could soon trade in the U.S. with applications being reviewed by the CFTC. That's according to outgoing CFTC member Summer Mersinger. I spoke with her last week.
Those can come to market now, and we're seeing some applications, and I believe we'll have some of those products trading live very soon. It would be great to get that trading back onshore in the United States. I think it's unfortunate that it has been driven offshore for so long, and the fact that we can have that here in the U.S. and under our regulatory framework is a really good thing for these markets and will be really beneficial to the industry broadly and to our economy here in the United States.
Well, that was just some of my conversation with outgoing CFTC member Summer Mersinger. So perpetual crypto futures could be something that we see, quote, soon.
You know, we've been talking a lot about where the leverage comes from in the crypto space after we saw the FTX-fueled implosion that really wiped out a lot of the brokers in the space.
That's exactly where my head went. I mean, what happens if this product becomes available, if we see or when we see some sort of decline in the price of some of these assets?
Well, it could draw a lot more retail interest in. Of course, retail investors, even in regular way stocks, have been very interested in the idea of leverage. Let's see where it all goes, Tim.
Well, that is going to do it for Bloomberg Crypto. Join us again next week right here from Bloomberg headquarters. This is Bloomberg.